The Iran war just escalated, and a piece of very important information was released to the market today, pushing three critical mineral ASX stocks strongly higher. We break it all down and show you how you can ride these stocks for massive gains. Backed by Australia's leading government-accredited share trading education and supported by major media outlets Australia-wide, I am Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil. Very important report today.
Yes, it is. We're going to be covering off a sector of the market that is looking to, benefit from these, times that we are experiencing right now. And let's dive right into that, because first up, we've got Lynas Rare Earths, which came out with some huge news today. Now, Lynas secured a deal with the US Pentagon that guarantees a minimum price of about US $110 per kilogram for key rare earth materials, effectively giving the company revenue certainty. Now, the agreement also commits the US to buy roughly $96 million worth of supply over 4 years, helping secure Western supply chains and reducing reliance on China. Now, Pedro, we're going to get into the chart in a second, but I just wanted to get your thoughts on all of this. Obviously, we do have the war in Iran. It is escalating. We are seeing the US now, attacking that Strait of Hormuz. Basically, countries looking to secure energy, and in particular rare earth energy, which is so vital to the evolving world we're living in now with AI tech and also military requirements. But the majority of the rare earths, as you know, were coming out of China, and there has been this push to get an alternative supply, especially from the Western nations. This deal here for Lynas, I mean, we covered this stock last year. We did touch on the fact that, this play was unfolding. This is just another, tick to that story, puts a lot more confidence around the fact that this movement is happening. And I mean, we're going to get into a few more than just Lynas. There are a few options on the ASX, but I mean, boy, when you talk about macro trends unfolding right before your eyes when it comes to that rare earth space and Lynas, it's pretty obvious, isn't it?
It is, and what's interesting to me is that we were talking about Lynas, I think it was just over a year ago when it was around $7, and you could actually see that unfolding technically on the chart before this whole story came out and before, we started having this, urgent need to reshore the rare earth story. So it just shows you how the technicals really does lead the fundamentals and how it's important to know how to read a chart. But basically, this ties into that whole mega trend that we're seeing and about that energy security and about, securing these critical minerals that the world really needs for digitization. In the mega trend side of things, this is all about energy. This whole thing that's happening, in Iran, obviously relates to oil, security as well, and other reasons as well that probably don't have time to get into. But this does bode well for the rare earth space, especially here in Australia, which we have the expertise, we have the players, and we are seeing companies now evolve into the next layer of that transition into refining the rare earths rather than just digging it out of the ground.
Yeah. I mean, I think national security was the other word you were looking for. But let's go to the chart and have a look at Lynas and see what's happened. And I mean, look, just to recap, you're right. We're looking at this stock around $7 for all people that are, students of ours or past students. I remember getting so many calls and emails saying, hey, what do you think of Lynas? What do you think of Lynas? And we covered what we thought around what was happening at $7. Beautiful technical setup all through this period here. The way it's broken out has been amazing, and I know there's been a lot of success stories from our people getting on this ride and making some really, really good gains. So well done to them. But I think the question is now, is there another opportunity, and what comes next for Lynas? Because, if you're still holding at $7, fine, the trend looks strong. This is a really important level for me, that $11.77. You can see how on the flip side, it came back to test it back in January 2026 before making its next leg higher. It had been the level that had created so much resistance for this stock since inception. So crucial level, bounced on the other side. I mean, this is some textbook stuff that we do teach, and I'll get into that in a second. But for me, thinking now Lynas, playing out where that next opportunity is very, very important in terms of that risk reward outlay. I mean, we've had a really strong March. Look how strong February has been as well, closing on the high. March is going on with it. it very much looks like we're going to be taking out this $22 level, or $21.96, $22 level. And then from there, we've got to ask the question, we move into this resistance up around 23, 24 bucks. So, I mean, the trajectory we're on, we saw the last time Lynas get vertical and expansive to this gradient of rise was back through this 2010 period, and it found a bit of a top around 23, 24 bucks. So the jury's still out for me. $23 is where I think this one's getting to in the short term, definitely. And so where it goes from there, we've got to see on this renewed interest this time around, whether it can break through. I mean, the story's there for it too, definitely, with this latest pickup, with the Pentagon and the US signing that deal. And there'll probably be more to come if this war continues to be prolonged and escalate. And, national security, as we mentioned, and obviously the digitization of things requires the need for these rare earths, more so and ever growing. But I think to play it safe, 23 bucks I'm looking at for Lynas, and then the all-time highs next and beyond. But just be mindful as well that when stocks do get really vertical, like you saw through this period in July, August, seeing a pullback is very healthy. So what I would like to see, once we get to testing these 23, 24 bucks, if we push on higher to that all-time high, I want to see where that pullback comes, because to me, that's going to be the big test in terms of whether we start to take out new highs. If we don't get a healthy pullback, and I'll try to show you with some kind of example, if we take this high out and then fail and push all the way back down like we did throughout this period with not a healthy pullback, then okay, that might be the peak in what buyers are willing to pay for Lynas in the short to medium term. But if we get something like this and then start basing higher again, well, that is the real chance, and that's probably the opportunity where Lynas goes, even more ballistic and takes out to a new all-time high. So just be mindful of that. Nice pullback, a bit extended on the way we're seeing these ups and downs. So really, for me, it's about treating these opportunities potentially even, on a shorter term time frame once they're in that really nice expansion. Because looking at Lynas at $7 and looking at Lynas today from a trading opportunity are two very different stories. One's come off a real strong consolidation. This is now in trend. So riding it and getting your stops right is, I guess, of most importance. And in recent price action, what I really like, huge little, consolidation through here. Very nice price broke out, tested the consolidation, now we're back up. So, I mean, all things are pointing to a break of this $22 level in the short term, and then on we go. But it's about managing that trade, maybe just managing that momentum through something like this is handy as well. If it breaks through this momentum, I'd get a bit cautious for further upside until we get more of a decent pullback for Lynas. Pedro, anything you want to add on this one, mate?
Yeah, so for me, Lynas is more of a canary in the coal mine than anything for maybe some of the other players that we're going to, cover a little bit later on. Because right now, like you mentioned, it is quite vertical. And if we go to my chart here on the monthly, you can see that the personality has really changed throughout this period. We can see that now recently the bars have gotten longer and more volatile. So it may not be something that a lot of people experience to ride out, basically. There might be a bit of fear when it's trading around these levels and a bit of greed when it's trading at these levels. Whereas, in these periods, it's a little bit more uniform. And, for me, just a risk is that when it starts to get really vertical, like it did back here in 2011, that could be that period where we start to see a downtrend. But again, the backdrop was very different back here than what we're seeing at the moment. We are seeing that national security things play out and that reshoring of resources happening. So that it does have that tailwind behind it. So I would expect, yes, maybe some short-term resistance around that $22. But if it does break above there, then I think a retest of the all-time high will be on the cards at around that $26, $27. So good for maybe a little short-term trade if you're a trader. If you're an investor, well, you still want to be managing this on the chart. You don't want to just buy it and then forget about it because it isn't one that it just trends for the life of it. As you can see, back here from 1989, it is very cyclical. So it's not a stock that you just buy and hold it and never sell throughout its life.
Yeah, it's a very important point you mentioned, because I mean, at the end of the day, it's what you want to keep, right? And I'm sure you see this so much with people coming to us, more so than I do. And it's like, okay, I bought a stock, it's gone up. What do I do now? And those things you mentioned, I think, are so important in terms of the cyclical, identifying the nature of the stock, how it runs, and try to secure as much as possible when you've got it on the table. Nothing worse than turning a winning trade into a losing trade.
Yeah, we see that all the time, and then you're suddenly a long-term shareholder when you wanted just a quick little trade out of it.
Yeah, fantastic. All right, now if you want to get the skills to do the stuff we've just been talking about, check this book out. It's How to Beat the Managed Funds. It is in the description. The link is there. It's free. You just have to pay the shipping. But if you do want to take things to the next level, go and check out our website. Check out the Diploma of Share Trading and Investment. It is government accredited. You won't find that anywhere else. And go and check out the testimonials, please, because they are showing some amazing results that our students and clients are getting. So please go and do that. But let's now move on to the next stock, which is Iluka Resources. Now, Pedro, we're going to keep this theme going, obviously, in the critical mineral space, because that's where it's at right now. But Iluka, another one that is digging its toes in this space and could really win big from what's unfolding.
Yeah, it definitely is. They're doubling down on the rare earth story. So they have a separate segment of their business, which is their mineral sands. And that one, they're not getting as much revenue from that sector. So they've kind of put that on pause. And that's really what the market was digesting around these periods, January, February, out of those reports that a segment of the business wasn't doing very well. But what they're actually doing is they're deploying their capital into their rare earth plays, and they're obviously developing a rare earth refinery over in Perth. So that will be online, even later this year or early next year. So I love this little consolidation that's happening over here. And I know love is a very strong word and shouldn't be used lightly when it comes to stocks. You should never fall in love with a stock, but the pattern is what's really getting me here. And I'll go to the weekly chart to show you what's going on. So it's basically being range bound from around that $7 really to that let's see, that $5 mark there. So there's some consolidation happening. It's been bought, it's been sold, it's been bought, it's been sold, and you can see the agreements between the buyers and the sellers roughly anywhere between that $5 and that $7. Now it's when it springs out of one of these two zones. That's where you're going to get the majority of the move from, because that's what happens with these types of stocks. They're range bound for a while, and then suddenly price breaks to the upside and then breaks out quite sharply, as we saw in this period in October 25, but then it abruptly got sold off. But this has still a lot more to run and a whole lot more in its tank, I believe. I think that that expansion and the contraction has finished. I think that we are in that kind of expansionary phase of this stock, and I do believe that we're trending up. And rightly so, I've put that arrow just around that $11 mark, which I think that's where we might find that kind of next resistance around that. If I can get that right, around that $11, there was a little bit of resistance back in the past in 2022. So as you can see, there's still a lot more. It could even double in price up to that $12. So I do quite like Iluka. Fundamentally, it's good. They're cashed up. The technicals are looking great. Let's have a look at the monthly chart here, and I'll expand that out. And you can see that every time that it has these types of phases, it bounces quite sharply of it, and it does look like it's due for that next rise. So for me, not much more needs to be said. $10 to $12, I would say, is the target for Iluka. And it's only a matter of time until that plays out.
Yeah. And I mean, just on my chart, obviously, like when people say, is it worthwhile looking at the big picture or looking at price action from years ago? It's not, why do you care about looking at price from 10 years ago? It's not important today. The world's changed. Well, I'm sorry to tell you, but Iluka, since 2014, $3 has been the level, really has been the level of huge support. It's bounced from this level and had gone on for big runs, now talking 12 years. And most recently, we did it back in 2025. This is why it is so important to understand the whole picture of stuff. Again, things we do teach. So please do go check out that website if you do want to learn the professional way in terms of tackling the good moments to get in and out of stock, because that's what it comes down to at the end. It doesn't matter about the story, the fundamentals, where that's all the what if world that everyone lives in terms of What are the analysts going to predict? Is this information going to change the stock? Is this going to do that? If that's going to do that. But at the end of the day, if your goal is to trade for profit, well, you got to get good at buying right and selling right. And there's no better way than learning these techniques that we show, because price over the history of the stock is very important. And it's evident here with Iluka, like most other stocks we show. And even this level back at $5.80, I mean, huge resistance for a long time, held price up. And now look where the stock's bouncing, and it's on that second level. So I agree with you, mate. I think this one, once it breaks out, if it breaks out above that 710, you look at it 820, 830 initially, but it could very easily get back up to that 1020 mark, like in that previous run it had in 2022. So pretty good upside for Iluka. But let's now move on to our third stock, which is Arafura Resources. Now this one here on the chart, Pedro, is a very interesting stock. So we'll just bring it up and have a good look at the chart of Arafura. But unlike Lynas, which is really broken out and you're chasing that trend, this one probably somewhere in the middle. Arafura, well, in terms of opportunity, it's probably got the most opportunity, but you're starting at that lower base, which is always, I would say, a bit more of that high risk space, and it is a smaller stock than the other two. So you've got to bear in mind, we're talking about a 30-cent stock at the moment. But what's interesting about it, and this is where the comparison comes in to Lynas, is that it develops the Nolans project in Northern Territory. It's focused on neodymium, praseodymium, and I'm sorry if I said that wrong, but it's basically the same magnet metals that Lynas supplies. So they're producing the same stuff, and the common sense here is if Lynas gets hot and becomes an option for to divest of Chinese rare earth and materials, well, then you've got to look at some of these smaller players, because they also become that option. And if this one's doing the same as Lynas in terms of supply, it's time to have a good look at it. And I think this level is crucial where it's at right now, 20 cents. We saw it base out for a little while. It's doing all the things you want to see of a company trying to get into that expansion phase. Huge basing up pattern. We saw buyers come in. Yes, there was a bit of a sell-off, but what's promising is that the sell-off has held above where that initial base was. So often you see these stocks at these levels, when they jump up, they sell off, and they basically sell off and end up doing nothing. They go back to that low where they started breaking out, and that kind of confirms for you that it was just a bit of speculation more so than real buying, supporting this in the eventuation that this company is going to turn the corner and start moving up long term. But what's different is it's based higher above that initial 10-cent push, and now we're seeing really a huge spike occurred in October 2025, trying to challenge that high. Yes, we've sold off, but now we're starting to find another higher base around that 30 cents. So I think, again, if this one starts to take out that 32, 33 cents, we're potentially going to go for another run up and start challenging, these levels at around 48, 50 cents. And we do that, and you're looking at, 68, almost 70% upside just to that immediate level, let alone if we've truly turned the corner and this one starts to go into those lofty dollar levels, which would be amazing for this company. But it must be said that it is quite a volatile stock, so it's not for the faint-hearted. You do really need to know what you're doing and accept the level of risk and volatility that comes with this. The only other thing I really want to add is, check this out. The most amount of volume we've ever seen in history, and that literally has happened on the biggest uptick the stock's had in recent times. So that's telling me we've come into that and now we're being supported. As long as we don't take out this buying through here, that tells me that's some serious buying coming in, and we're likely to break higher and continue to go. That's something you don't ignore when you've got the most amount of volume of a stock that's been around for the best part of 20 years come in, and you're watching it unfold live, and buyers have actually supported, or the price has actually spiked up strongly on that volume coming in. So I think this one here is a must watch and probably the most potential out of all of them, but always monitor both sides. And if it breaks through this momentum, then it gives you reason to sit on the sideline a bit more and wait for further developments. But right now, as long as it holds, takes out 33, 34, you're looking at potentially the start of the next run up. Your thoughts, mate?
Yeah, Arafura. I mean, this is a company that received that 533 million USD debt funding facility from the Australian government. So, they're obviously believing in this company, and they're also creating the processing plant, to process rare earths. So I think that's what these three stocks have in common, that they're actually moving up the value chain to provide that processing, and which is what basically China dominates, and what the West is trying to kind of hedge against. We've already seen, China limits the rare earth supplies to Japan and to the US. So this is definitely part of the contingency plan. Now, in terms of the technicals, I agree. This is looking so interesting, and it's one of those early stages ones that you should be looking at it now. Once again, it's one of those that consolidates and then rises sharply. We can see around these periods here, it has these consolidations or moves sideways, and then it trends up. Has a consolidation and then sharp move up. Again, consolidation and sharp move up. So that's exactly what it's doing. Now, this is why you shouldn't really disregard the past or how these stocks move, because history does repeat itself. Now we're having the same thing happen. We've got that rise, sideways consolidation, a huge spike to the upside, and I'm sure a lot of people would have missed out on that move because it just moves so fast. Or if you were unexperienced, you might have gotten in around this period, which is something that if you did, don't worry, that can be fixed. You just need to know how to read the technicals, and you're obviously welcome to visit any of our courses. But really, this one is moving back to that consolidation period, and I think that this is the time to be looking at it. And apologies for all those messy arrows there on the chart. But really, again, this is a story like Iluka. It's range bound at the moment for me. I would say that the price agreement is really that upper band is at 30 cents. I would put that at 30 cents, and the lower band, around that 20-cent mark. So this could be trading around that range for a little bit, but this is the time to be studying the stock. Looking at volume, I agree that volume is incredible. The way that it's consistent as well. So it wasn't just one sharp rise like we sometimes see with the liquid stocks. You see a sharp rise in volume and then it's back down to nothing. This has increased in volume and the volume is maintained. So you want to be trading in this liquid type market. So then you've got a buyer on the other side of your sell. If you do want to enact that sell, and of course you want to be able to buy at a good price. So for me, yep, it's range bound. Definitely you'd be wanting to look at some trading rules around here, do a bit of back testing on the stock and look to get in before that rise happens, because once it breaks away sharply, then it may be too late, because it will receive some resistance around that 60 to 70 cent mark up here. So if it does rise to there in one day, what are you going to do? You don't want to be those people buying at that 70 cents only to see it fall away. So really you want that nice little runway. And I would say from that 30 cents, you've got that 120% upside, which is very nice. I'm sure a lot of people, could do a lot with a profit margin like that.
Yeah, especially in today's environment. But if you want more hot stock tips from us, check out our video, 3 ASX stocks everyone missed by ASAP.